Starting to see quite the leap in Dash coin. We're actually sitting at about $110, $111, and we're up almost 2% already with the start of this trading week. Is that a good thing? Is this just a fake out? Is it a bull trap, or is this the real thing? Well, let's take a look at this thing up close. This is our 30-minute linear chart on Dash coin, and I have two different patterns here. And the more bullish pattern would have this green 5-wave diagonal up, which is in progress. This would have a 1, a 2, and a 3 so far. That has a little bit higher than I would expect. We expect a small pullback into the 4th wave range, and then a final 5th wave up. That would be a 5-wave diagonal. However, we can't declare a 4th and a 5th wave until we see one. So we're going to see what happens. Do we keep extending directly from here, or are we going to see a pullback and then finally a 5th wave up? Because the alternate scenario is that we have an A, B up, and then we are in the midst of a C wave to complete a corrective fake out rally, as I was just referencing, a zigzag up. That could take us as high as 117, maybe even 120 if we have an especially extended C wave up to finish off this pattern. If that is the case, that means we have some more downside to go, which we're going to look at in the big picture logarithmic chart right now. This chart is available in the description below, so please feel free to check out that link. Our big pattern is red right now, and red was primary just because we broke our lower low that we hit in the summer of 2021, and because we've retraced more than 61.8% of what I was calling the larger wave one, and that larger wave one started from March, went all the way up to May of 2021, and well, we have a classic looking zigzag here. We have an A wave down. This entire rally is best identified as a B wave bounce, so it's a fake out bounce, and we have not seen anything particularly good since August 23rd in Dash. After we kind of outran the rest of the crypto markets in Dash, we have actually been ahead in its crash. Those two things rhyme. I probably knew that. So you have a 1, 2, you have a 3, and the red pattern is saying that we should see a 4th wave bounce. Possibly it could cut quite high. We could see this thing go as high as the mid of $100 range before it pulls back to a lower low, as far down as the $61 range. And there is confluence there in that we have, well, we broke the 61.8% retrace from this first wave, which is a standard retrace point for a relatively deep retrace. So most likely we'll hit the 76.4% retrace. That would probably serve as a floor, maybe a rubber floor, not a hard floor. That sits at $64. In addition to that, based on this A wave, if our C wave goes down just as far, that falls exactly at about $61. That's a very common equivalence in a zigzag correction in which your C wave down is a 1-to-1, a 1.0 extension of the AB that precedes. What happens if we're done with the correction? What if we don't have any more downside to go? Well, that would be the green pattern. And the green pattern has this entire correction as well as complete. I'm not totally convinced because we broke down through this 0.764 extension quite a bit. I don't think we would have pierced it that hard if we weren't going to legitimately break down through it and hit the next resistance down. In addition, that was it did break right below this red support, which was our midsummer low around $101. When you see something peak down like that and doesn't quite hit the next Fibonacci level down, it's generally a sign that you're going to see a little bit lower. So if we do go about a little bit lower, like I said, 61 would be the low point. That's not quite a 50% drop from here, but it would still be a sizable pullback, but it would also be a sizable discount. So that is the bright side of things. If we are actually done with all the downside so far, that is what the green pattern is showing us. And if that is the case, expect the first subwave to hit somewhere between about $175 and $326. These are standard targets off of larger 1, 2. And now that we are assuming that the bottom of our actual wave 2 is way down here in January or within past week or so, this projection would, well, it could be a little higher if we're really done. I'm going to leave it as this just to keep things conservative, assume that we may go down a little bit more. That would be your target range. So what should you be doing now? You should start thinking about buying because we are much closer to the bottom than we were to the top, the peak that we had in the $476 range. This is the time to start strategizing, thinking about buying and being greedy when others are fearful. Again, you may have a few more chances. I would like to see a proper 5-wave impulse up, followed by a 3-wave correction down before I'm ready to buy my pants off. And in addition to buying my pants off, I wouldn't just buy Dash. Remember, Dash is actually one of the older cryptos, so it has a bit more robust structure in place. It has more history. That doesn't mean you shouldn't diversify. Don't forget to buy other altcoins as well. You could go with Bitcoin and Ethereum, but then for altcoins, buy 6, 7, 8 other ones. You never know which one's going to go up. And it's actually very similar to picking tech stocks. You don't get most of them right, but the ones that you do get right will more than offset all the ones you got wrong. So remember that for crypto, they do follow the same sentiment patterns. They move together. However, some cryptos may fail, some may excel. You never know. Now, where are we looking big picture? What is our big picture chart showing? This is where I'm a bit more excited. Assuming that we had our third wave top way back in January 2018, and this is actually a fourth wave, which is possible because Dash has more history. We have a first wave and a second wave back here. All the fibs actually line up. Our third wave hit the 1.618 extension of our first and second waves, which is a standard and very bullish pattern. We retraced lower than the ideal retracement point. We shouldn't have gone below about $93, which is the 1.0 extension. We went all the way down to the 0.764 back in March of 2020 during the everything crash. And what I have since then is looking like a standard first wave and the second wave after that. I know there's a lot of clutter on the screen, where your first wave will typically hit the 1.382 extension of the overall big pattern. And you came just a few dollars short of that, about $20 short, $30, something like that. Wave 2, when you look at this big picture, it doesn't look that impressive. It's just a small little hiccup in the overall progress. So what am I alluding to here? Our next target, the third wave of our larger fifth wave, that's this huge pattern here. Well, the standard target for that should be the 1.764 extension of the 1-2 that you see here. What is that number? That is 2863. That's right. You heard that right. 2863. If we project the returns from where we are at this moment, man, that's a 23x return possibly. But we need to see some more bullish action before we're ready to jump on that gravy train. So let's see if we can get this 1-2 here. I'm going to zoom back up a little bit just so it's a bit more clear. If we can get this 1-2 set up, then we are off to the races. We are in the third wave of a larger fifth wave. So different degrees in operation here. If we do break back down lower before we get that point, good chance we're going down to $61. If we do hit 61, keep an eye on all the other cryptos. We should see similar action in those. We should see Bitcoin approaching the $24,000 handle. Ethereum should be approaching $1,700. Those are the targets that I have. I see those as being in an expanded flat correction for their own corrections. Whereas in Dashcoin, this is actually a zigzag. That's a good thing because remember, if this is a wave 2, wave 3 is next. And well, I just gave you guys my projection for the ultimate wave 3 top. We've got a lot of upside if this thing works out. So don't forget to subscribe because I'm definitely going to have some more alerts out there on when to buy, how to allocate. I'm going to give you my return projections across the crypto space. So if you enjoyed my video, give me a like. And until next time, thank you for watching and happy trading.